With a new year just around the corner, we're on the lookout for the next apple for your portfolio. So which growth stocks will be the big winners for 2013? Here to weigh in is Edward Painvin, Chief Investment Officer for Chase Investment Counsel and co-manager of the Chase Growth Fund. Edward, welcome to the program.
Well, thank you, Jennifer. It's good to be here.
Before we get into stock picks, I want to get your outlook for growth stocks next year. Dividend stocks seem to be the leaders of the market in 2012. Do you see the tide changing towards growth stocks in 2013, especially given pending changes in tax policy and QE Infinity that seems to serve as an elixir for stocks?
Yeah, no, it's a very good question, Jennifer. You know, here at Chase, we are bottom-up investment managers, and we do our best, screening for new ideas where the growth profile of those names is going to continue, not only in next year, but also 2014 and 15. And there's definitely going to be a scarcity value of growth next year in light of some of the global macro headwinds that you talked about, which makes our job even more difficult. But I think that with our process that we have intact, we'll be able to identify those names.
So which stocks will be the best growth stocks for next year?
Well, we actually have a couple of holiday gift ideas for your viewers for 2013. And one of them is Precision Cast Parts. The symbol is PCP. This is a company out of Oregon that manufactures castings and forge products for the commercial aviation sector. So they do everything from castings to airfoils to airframes to fasteners for these commercial airliners. And the reason we're excited about the name is really twofold. It's two key drivers. The first one is if you think about what's going on in the commercial aerospace, is a lot of these airliners are looking for these more fuel-efficient, lighter planes with more capabilities. In fact, if you listen to Boeing, they have about 925 planes in backlog alone, which is about $300 billion in value. And so PCP is a direct beneficiary of that trend. The other element, even more specifically, is what's going on with the 787 Dreamliner. Right now, the run rate is about 5 planes per month. That's going to be doubling over the course of the next 12 months. To about 10 planes per month, and PCP has about $10 million worth of content in those planes. So, PCP is a name growing 19% over the course of the next 12 to 18 months, trading at a PE of less than 15. So we have a very, very attractive PE to growth rate, and a great kind of growth story for 2013, kind of regardless of what happens with the global macro environment.
And you like the oil space next year as well, right?
Yeah, that's correct. There's a couple of names in the oil space, oil services space, that we are very, very confident in. The first one is Cameron International. This is basically a manufacturer of wellheads, of valves, of blowout preventers to the oil and gas industry. And when you think about what's going on in the energy complex overall, a lot of these international E&P companies and these national oil companies are going to continue to explore and to develop their properties. As long as oil and the underlying commodity stays around 70, 75 and above, which is the price deck that they're using for their capital spending budgets, you're going to see continued robust activity, particularly offshore and international. And so the return on investments on those projects is still very good. So Cameron's going to benefit from that. And then the other element, the other second driver to this name for us is kind of the silver lining of what happened post the deep water rise in the Gulf of Mexico several years ago, where you're seeing a lot of retrofits, a new upgrade cycle, if you will, with a lot of these rigs. In the past, it was only one blowout preventers, and now there's going to be two going forward. So, Cameron should definitely benefit from that. It's got a great growth profile of 30% next year, trading at 13 times. Again, really fitting the key criteria of our investment process.
Now, I also have in my notes that you favor eBay and Qualcomm. Those were certainly some high flyers for 2012. I mean, how much upside is there for either of these names next year?
Well, typically for some of our core holdings, we're looking for still about 20 to 25% upside. I mean, there's a tremendous theme going on right now in digital e-commerce in terms of mobility with users. There's more and more e-commerce being done on mobile devices. I think for PayPal, for example, there's close to 120 million active users, and that number continues to grow. And I think that when you think about the proliferation of those devices going forward and the amount of transaction volume that's happening online, that's only going to continue to increase. And smartphones, which Qualcomm benefits with the manufacturing of the Snapdragon chipset, which goes into a lot of smartphones, they're really kind of in a pole position in the manufacture of that chipset, as well as providing that to a lot of handset OEMs, and that will just continue to grow heading into 2013.
Edward, thanks so much for coming on the program and for those stock picks. Happy holidays.
Same to you, Jennifer. Thank you.